I was supposed to have an InnovX hoodie, but apparently I grew out of it. So
too big for the shirt.
Yeah. Dragos, thank you so much for accepting our invitation here. And of course, we'll keep this fire chat a bit snappy, you know, machine gun style, you know, so that everybody can move on to the final part. So I can say, you know, I also own or invest in SME, and I've been to a bank with this great project. I gave you the financials. I showed them, you know, pretty good picture, but I came with a project that is somehow outside of my means, and it's nice, it's expansion, etc. And the bank kind of very kindly refused me. I mean, of course, they were talking something about gearing and leverage and capital structure, and you know, I felt they were very kind, as I said. But you know, then I left thinking, okay, am I lost? Do I have a problem? You know, what's happening? You know, with these SMEs in this space, you know, how can we finance them?
Well, the bank has a certain set of rules and of criteria and a certain appetite for risk. And you are rewarded if you comply with those criteria by a quite attractive interest rate most of the time. A bank is not having the same appetite for risk as a VC investor or as a private investor is going to have. So for everybody's problems, there is probably a certain solution that fits. For some, it is the bank loan, if you do fulfill the criteria and you are happy to burden your balance sheet with the debt. But for somebody, it could be an outside investment, the price for which would normally be giving up a part of the equity. Now, a lot of people are very, very attached to their equity, and I can really understand it. It's your baby, you want to keep all of it, you don't feel like sharing 25% or 50% with somebody else. But what entrepreneurs are starting to learn, at least the ones we get a chance to talk to, is that we don't only put money, take equity, and then come in 5 years and want to sell the company. A private equity fund and a VC fund are usually partners. They would come, they would spend time with the entrepreneur, they would build together the business case, they would validate it, they would challenge it, and they would deliver it together. Because when the interests are aligned, then you both row in the same direction. So it can be that grants are a perfect form of financing for some companies. It can be that bank loans are private debt or mezzanine. But it can be that an investment sometimes is better suited. And it's for either the entrepreneur to educate themselves and to understand what are the differences and what are the benefits of each one, or they can find an advisor. And I'm sure even today there will be a lot of people that can guide them through these choices.
And of course, these are not mutually exclusive.
They're not
so
mutually
you can have
exclusive.
A mix of...
No, they just solve different problems in a way.
I mean, I made this introduction because, of course, this is the whole mantra that we keep hearing. You know, the people, especially in this part of the world, they go to a bank and they expect the bank to provide everything. And then, but the European Commission, as you know, found this market failure, you know, where the SMEs and the medium-sized companies in Europe, but especially in Southern Eastern Europe and, of course, Romania, face a shortage of equity capital.
That's true. So, and it's not only in, as you say, not only in Romania, not only in Europe. There are parts of the world, especially the United States, where private equity has been around for 40 years, where already you have enough funds, you have enough education, you have history, you have traction. So let's say the instrument or the solution is much more developed and accessible and wished or wanted by the entrepreneurs. Over here, it's something rather exotic. In my discussions with entrepreneurs, I also feel it's got a bit of a bad reputation from 20, 30 years ago when you had the private equity funds taking over companies, stripping them of assets, firing people, and just making a quick buck on the sale of it, which is not what the growth capital in private equity really is about. So now people are finding out about the solution and putting it together with the other tools they have in the box for when they will be needed. But indeed, it is something in its infancy, especially in Eastern Europe. And out of Eastern Europe, Romania is probably lagging behind everybody else.
I mean, if you look at this risk capital, whether it is VC or private equity, I mean, is there a specific type of company that is better suited for PE versus the VC funds?
Definitely. It is about the maturity of the company, and it is about the risk profile. So a company that has a proven product, a proven model, has some history of growth, of attracting customers, they would probably rather go towards a PE fund, whereas somebody that is in the earlier stages would probably be fitted with the expertise and with the risk appetite of a VC fund. It's not as clear cut as that, but to make it in the simplest way, I think that's the way to think about it.
And of course, maturity comes with profitability, positive EBITDA, you know.
It doesn't have to be. It doesn't have to be. If the company has overinvested in expansion, in product development, in marketing, and their fundamentals are looking like a profitable company, but they have chosen to overinvest, and they, at the moment they have a negative EBITDA, we will definitely take a look. But if their margins are still, you know, they're still burning cash and haven't yet started producing any revenue, then it's definitely not for a private equity.
Keeping the discussion still at the general level, although from the practitioner perspective, of course, I mean, how have you, I mean, if you look at the Romanian entrepreneurial ecosystem, what is your take on it? How do you characterize it briefly?
From the point of view of the investor?
Then early stage.
No, it's early stage for PE, for private equity. The ecosystem still has, or well, already has 30 years of development. So it's not that early stage as early 90s. There's a lot of opportunity. This is why we have set up this fund, because there is a lot of opportunity in SMEs in Romania. Because nobody else had the appetite to come over here and start investing and rolling up their sleeves together with the entrepreneurs and going into finding growth together. The other, on the other side, there's still quite a lot of entrepreneurial types that are afraid to make that step. They don't understand it very well, and they're afraid to make the step. So they realize they need something, but they're maybe not yet ready. So we feel there's a lot of need for education as to what private equity is for the benefit of the entrepreneur. Because once people, you know, if you're telling somebody, I would like to have half of your company, everybody's going to say, oh, you know, take it easy. If you'd say, would you like to find a way together to triple your business in 3 years? Then everybody says, yeah, sure, I would like. Okay, and for that I will need to give up some equity. Maybe I can live with it.
In this education, you believe that there is a role for the public sector as well, or it's basically the practitioners, the funds, you know, that are, you know, of course, that have a vested interest in this thing in order to push the knowledge?
I actually had this very discussion this morning at the Ministry of Development. You didn't know about it, but we were there. And there is actually a desire from the public space, from actually the ministries, to push this education effort forward. We haven't talked any particularities or practicalities how to do it, but they would like to be involved. Because it is a benefic force, wherever you have a solid private equity system, it is bringing value add to the economy.
And I think it's probably not only private equity in general, but private equity for the small and medium-sized enterprises, because then everything revolves around this SME concept and what we like to think as the Mittelstand. I mean, not necessarily in the German exception of the word, but you know that layer of small and medium-sized companies that are growing, that are generating revenues, employment, you know, opportunities, and they have a critical impact in GDP, in exports. You know, this is something we've seen it in the UK.
Yeah. We've
seen it to some extent also in France, in the developed countries in Europe as well. And of course, here in Central Eastern Europe and Romania, we want to see it. So my question there is, you know, when do you think we will have, if we will have, a Romanian Mittelstand?
I can't tell you why. We definitely will. It's going into the right direction. It's going in the right direction, but I really have no idea.
The Ministry of Development didn't provide any hints on that.
And if they
I
would,
think they also want to hear out, and that's a great idea that they're consulting with practitioners, with people who put skin in the game, you know, and because that's the whole thing. You know, policy dialogue has to be a dialogue. So.
Absolutely, and for the development of the SMEs into solid companies, there are quite a lot of things that need to happen. There needs to be a professionalization of management. In a lot of SMEs, the founder or the founders are everything from CEO to driver and cleaning lady. And up to a certain level of development of the company, that's fine. And obviously they are doing something well because they are growing. But from a certain size up, you need help and you need professionals that would take the company forward. This is one of the first things that the private equity fund is looking at. They are how to take a rough gem and polish it and make it into a diamond that afterwards can be sold. The private equity funds that are in mid-cap or in large cap, they are already taking over companies with established management, with established governance, with processes, with reporting, with data-driven decision. So they don't need to enforce or encourage these changes. But a private equity in SMEs, they will look at that. And
basically, you're an activist, you know,
yes,
as you say, because I look at your motto, private equity with a human touch.
Yes.
I mean, you're getting involved, you're hands-on in this. And I think this is a very important fact that you are raising, that you need to move towards a corporation while still maintaining agility of a not as a startup, but okay, scale up or as a more or less early stage,
again,
one or several man show business.
Corporation has also a bad name because everybody equates it with bureaucracy, with slowness of decision, with whereas it doesn't have to be. What we are thinking about is having some rational objectives for the company. From those rational objectives, deriving some rational and really practical processes. How are we going to achieve that? Okay, when we know how we want to achieve that, how are we going to track it? What are the right KPIs? How are we going to be able to collect the data and report it? All logical steps. But when you grow a company, let's say from 2 employees to 15 employees and then to 40 employees, you can run it even without that. But above a certain level, and you learn to run it as the entrepreneur, you feel it's okay, and you don't feel the need for something else. But you do need it, and that's something else, even if you don't know it consciously.
I will ask you, but not this question, the next one will be why you, the founders of Morphosis, all Romanian citizens but living and working abroad, decided to come back. And I think you answered partly this question, you know, previously, but I want to know, you know, from this perspective of actually transferring the know-how, you know, how you guys got together, because you put together a whole array of skills and capabilities that are exceeding, let's say, the standard PE or VC. You're not coming necessarily from pure financial background.
We're nothing.
You are, but you're coming also from an industrial background, and kind of cumulatively you add up a lot of years of experience. And how this works in terms of advising the companies you invest in and understanding their real issues, you know, other than just simply looking at some numbers.
Well, it was part of our assessment of the opportunity, that the opportunity is not in more investment bankers coming and investing capital in the market, but in people that are bringing what we would like to call smart capital that comes with the skills. How we managed to put the team together, it was pure luck, because I am friends with 2 of the other founders since we've been in high school, and with the 4th, we know each other for another 20 years since our first jobs. So we just a couple of people that knew each other for a long time. We knew about our skills, we knew about our experiences, and we thought that it would fit very well. We have me, and it's finance, but it's corporate finance. It's not investment banking, and it's not financial sector experience. We have somebody with general management, sales and marketing. We have somebody with transactions. And we have somebody with private equity experience. And we thought you know, okay, it would be great if we would also have somebody really operational, like a production manager, but maybe we can, you know, that person we can find externally. But between us, we cover the operational areas of a company, and we thought, okay, this is the way we can truly add value compared to a regular PE.
And from this perspective, looking also at the next steps in terms of exit, you know, how would you advise, how would you work alongside the founders, on the owners, you know, towards an exit? I mean, I know it's too early right now. You haven't deployed yet but everybody starts an investment with the exit in mind.
Absolutely, so. That's exactly the point. You have to have an exit strategy when you make the investment. If you really can't think of anything, or your exit strategy is sketchy, just don't do the investment. There are several ways. We have a very good network between the mid-cap and large-cap funds. So those will be people we will be talking about all of our investments. And we're not going to be talking to them only when we want to start the exit process. We're starting to talk to them from now. You know, you're planting the seeds, you tell them about the doc process, you ask them, wouldn't you like to look at your portfolio companies and apply the doc process solution to them, because it's going to save you so much money. We go and talk to strategics already, and we see some things will crystallize. We are learning the market, and in time we will see what will be the best exit, because it will also depend on what kind of exit everybody will want to make. Do you want to only exit fully the Morphosis stake in it? Do the founders also want to exit with us, and then we do a full exit together? There will be a continuation, there will be a rollover maybe into our fund too. That part we don't have to figure it now. But now it starts let's say the exit marketing and the general thinking of how it's going to be. And we are doing that diligently.
How prepared do you think Romanian SME?
This wonderful conversation.
Let's wrap it up then. Just one last question.
One last question.
Okay.
What are your plans?
To keep on finding entrepreneurs that really believe in their growth potential and in the success of what they have started, and to partner with them. That's basically what the plan.
Best of luck, and thank you so much once
and
again.
Thank you.
Thank you all.
Thank you all.